Welcome to the Rise Network podcast show, a podcast dedicated to help you reach your dream lifestyle through investing in real estate. We're going to be sitting down with new, intermediate, and experienced investors to talk all about real estate and how it has changed their lives. If you're looking to scale your portfolio or even just get into real estate investing, you're in the right place. Make sure to tune in.
What's going on, everyone? Welcome to the Rise Real Estate Investing Podcast with your host, Bayu Thaba and
Austin Ye. How's everything going, bro?
Doing good, man. Doing good. It's all, the same shit, different day. That's kind of the vibe right now. Next week is March break, even though it doesn't really impact either one of us. I'm sure the work week will slow down a little bit.
The only reason why I know it's March break is because we speak to adults. And I'm just like, yo, why don't we meet up or phone call this? Like, no, not next week, man. It's March break. I'm like, oh,
oh, man. What have you been up to?
No. I've asked you first. You didn't ask me first.
So I went to a pretty good land and development workshop this last weekend. Darren Voros was one of the speakers. One thing he said really kind of stood out to me, right? He's just like, look, if we're ultimately like investing in existing commercial multifamily assets, we're increasing rents, decreasing expenses, we're doing the burr on that. Are we really doing anything to solve the housing supply issue? Like, are we actually contributing to society? Was basically the message that he had asked, right? And I was like, fuck, you're kind of right. Like, not really, right? Versus like if you're going out and you're building new supply, you're taking advantage of MLS Select to help you do that, right? And CMHC and whatever, right? Then you're actually contributing to society. So that kind of really stood out to me. And I was like, wow, that's pretty interesting. But not that I'm going to stop doing commercial like apartment buildings or anything, but it did stand out to me and it was kind of relatable. But that was,
that being said, I do a lot of investors really think that what they're doing is net positive. It is, for sure. But like with smaller stuff, single families, et cetera, et cetera.
The concept used to be that you're taking uninhabitable assets and you're making it into rental. So you're bringing rental supply to the market, right? I was talking to Corey Frock today morning. And he said, on one end, the government incentives are working because he's doing like I think it was a 5 or 6 unit project in St. Catharines. And he said, I would have done 4 units, but in order to qualify for CMHC, MLI, and the more attractive kind of products,
right,
I made this into, I think it was a 5 or 6, can't remember now what it was exactly. But so on one end, it is working. He's contributing to society, right? And I think there's a way to do investing that does contribute to society, but because that's the biggest problem with real estate in Canada is, like, real estate was a majority or a significant portion of our economy, but it's unproductive. It's an unproductive asset class.
The financialization of housing, essentially.
Yeah.
Right? I agree, though. Like, I largely agree that development is obviously, like, net positive. Obviously, people want to bitch and moan about it, that developers are making money. Capitalist society, you need to make money in order to build, right? Otherwise, you're just not going to build and assume that risk. But, yeah, with the... I don't know. I used to always convince... Like, this is, like, philosophical...
Yeah.
Combo, but I used to always convince myself, I was like, so you're taking uninhabitable properties.
But we're not. We're really not.
Yeah, exactly. Like, it's for a lot of investors, I think that most people would rather stay. It's not uninhabitable, like, it's livable, it's just not great, but people would rather live there at 30% of the rents than to live in a habitable place and pay multiples more than what they're paying now, right? So, it's a double-edged sword. You can look at it from both perspectives, but I like that you're, like, what you said, what Darren said, and what you sort of mentioned here, it does resonate with me as well. I think you are, you're making money on it, but you could confidently say you are making a net positive, right? Like, you're adding housing.
Is it really going to change anything we do? I don't know, right? If anyone said this to Darren, just know you had an impact, but will it change anything? I don't know.
Right.
It's still obviously risky, still requires a lot of capital, different issues and stuff like that, right? But so that's one thing. The second is, I'm honestly just doing more like coffees, conversations, partnerships with people, right? Just trying to see, like, how can we get together and do something bigger on the investing side, right? Because I think the reality is a lot of the small deals just don't make sense, right? Like, it's super saturated now. Like, a lot of people want a duplex or triplex and all that kind of stuff, right? So a lot of the margins been removed. Like, I was looking at, I think it was 4 units in Windsor for 500 and something thousand. And then there was 15 units in Windsor for around 1.5. Right? So like, or the 4 units must have been more than 500. I can't remember what it was, right? But basically like when you compare the small stuff at about 150 to 170 a unit, and you look at the big stuff and you're like, okay, I could get this for 100K unit, but it requires more capital and it's a slightly different strategy and stuff like that. Even if the big project goes not as good as it could have, right? You're still ultimately your cost of acquisition per unit is a lot lower, and it makes more sense that there's more energy, more efficiency, and more exits with MLI and stuff like that that you can kind of take advantage of. You just can't be willing to go at it alone, or you're going to put all of your eggs in one basket, which like I don't really want to do either, right? So talking to a couple of people about like, especially like other active investors, and maybe we go like, 3 active investors and everyone goes like 200-300 grand each or something like that, right? Like that's a much better approach than, trying to just go out alone and raise capital and stuff like that. And this is nothing new for anyone that's listening, right? Like this is what a lot of people have been doing for a long time. And I think I've just been resistant to it, but you gotta, whatever it is called, adjust to it.
Right. And I guess the big thing is that like you can actually sort of mathematically calculate the value that you add on these bigger things. The fourplex, even if you turn around all the units and you calculate cap rates and say it should be worth X amount, you are still subject to comparables. And I find if there's no property that's comparable to yours in terms like all the fourplexes are a little bit run down, like the appraiser's not going to go in there and make all of these insane adjustments saying that your property is going to be worth 400K more than the other fourplex, despite the other fourplex being run down. So you are, and that we face this as well, right? I face this as well with the 5 unit. That is on the residential side, that they limited the comps, right? Despite all of the comps being sold, the tenants were under market rent, but nothing you can do about it. I guess on my end of things, updates, I'm trying to think what update, what have I been up to? Obviously, same thing as you, like having a lot more coffee chats with people, seeing how we can collaborate with each other, especially on the mortgage business side as well. Doing like a lot of the legwork, like setting up a website, et cetera, et cetera. I mentioned this in my story actually, but there was a non-payment of rent that happened a while back ago. I want to say it was like the tenant ended up moving out in September-ish or October last year in 2023. They stopped paying rent for 2 months, got an N11 signed, and then they ended up moving out because they didn't catch up. And concurrently, I filed the N4, right? So the non-payment of rent, and then got my hearing date for next month. Gosh, how long has that been? That's like probably about 6 months.
Yeah.
So, I mean, still a long time, but much quicker than I was anticipating.
Are you self-representing for all this, or are you using a paralegal?
Here's the thing, right? I mean, it's like 2.7, 2.8K.
Yeah.
Like, it's not worth going to collections, right? And also, I don't think they're going to show up. So that's another thing. They're probably not going to show up. So even if I go in there, it'll be probably pretty straightforward at that point, Anyways, so I shot them a reminder, like, hey, by the way, we have a court hearing on this date. It's going to be on Zoom. Not sure if you've been getting those emails. I'm going to be there. Expect to see you guys there as well, right? It's going to be self-representation. And I also listed out, like if you don't show up, you make my life easier. If you show up, then you make my life easier in terms of garnishing wages, right? Like this is what's going to happen. ABC, XYZ, garnish wages, credit, open room. Yeah. I think, right?
Yeah.
Or front door. There's 2 of them. Front lobby. What is it called? I'm losing my mind.
Bro,
there's 2 programs, like front lobby, open room.
Yeah.
Right? Where you can report like the tenants that have LTV cases, non-payments, et cetera, et cetera. Garnish wages, your employer is going to be aware. It's going to be embarrassing. Like I just laid out the lay of the land. This is what the downside is.
Yeah.
I don't want to do any of this for you, dude. Like I don't want to spend a week putting together files and building my case, right? Like, and I don't even need 100% of the rent back. Like let's just give me 75% of the rent back, and I will close this case. No hearing, nothing. We move on our separate ways, and then we're done. And then they both responded because the tenants separated, so they both have beef with each other. They're both blaming each other.
Yeah.
And I told them that to make it fair, you're responsible for half, you're responsible for your half, 75% of each, and then that's it. If one of you guys don't pay and the other one pays, I'm taking the other one to court and be like, hey, like here's a text message. I worked it out with this person. This person's refusing to cooperate, right? And I'm still going to go after you. And that being said, both of them ended up responding and saying, fuck ton of excuses, but said we want to work something out. We don't want to go to court, and hopefully I'm able to figure out some sort of settlement. I don't know if I'm going to get the money back. Let's be real, but it's a cool way that once I got the hearing date, even though they both moved out, and it's been months since they moved out, I have this leverage position. It's like, yo, like
where did the hearing notice go to?
It went to the email, and then it also goes to the address of the property, which they
Right.
don't live there, but they will also get an email notification about it.
So is there no risk that they just say, hey, we never got the notice?
They get an email notification on it. So, I mean, and also I texted them, right? So, I mean, there's like, they're responding.
No, they look, ultimately, like, yeah, we're not gonna give tenants any ideas here. But ultimately it's just kind of the follow-up game, right? And whatever you collect is still like a net positive for you, right? Even if you collect like 25-50% of it, right? So that makes sense. You're really
even
good
if I
at following
collect
up.
50%, because I don't want to go to collections, dude.
I know.
Yeah. I had one of the tenants' mom's number too, so I called the mom and informed what was going on. And then she was taking notes down. She's like, I can't do anything. He's like, all I can do is
How'd you
speak
get the
to my
tenant's
son.
mom's number?
Because the mom was there with him one day. The property manager went. I told the property manager to get the mom's number. It's like, just in case we need to reach out to the mom. Anyways, yeah, that's enough about what's going on with us. Do you want to talk about like just what did the Bank of Canada do?
I mean, look,
Not much.
held
They
rates.
held rate. Yeah.
They held rates, right? There's nothing fucking surprising or new about that. The one thing that I pointed out in my story is they said it's okay. So for a while now, it's been, hey, we need to get inflation under 2 to 3%. Like it was always a range, right? And now they're saying, now that we're at 2.9, even though core is a little bit higher, I think, right? But even though now we're at 2.9, they're saying, it's going to take us a while to get to to 2, and we expect in the second half of this year to have inflation under control, which is now defined as being at 2%, right?
Yeah.
So from that perspective, my look at that is, okay, if we're really chasing 2% here, are we really going to have a cut while we're chasing 2%?
Right, exactly. And consider a lot of it's housing. How could
Yeah, well, yeah, and even just like freeing up supply, right? Like variable rate mortgage holders. Once we get like a little bit of a cut in that's now an additional like $200-$300 a month in our pockets, which we can then spend into the economy and therefore increase inflation, right? So, if he's saying that they're expecting to have things under control in the second half of the year, and then after that, cuts would be viable, right? Like it just doesn't make sense to do cuts in the first half of the year like people were anticipating. But that's, just really digging into the rhetoric, right?
That's sort of what he highlighted is the risk factors. Like they're concerned about the risk factors of cutting too early and then reaccelerating inflation and undoing all of the work. So they're cognizant of that fact.
You know what's funny? Like I feel like a dumbass sometimes because I'll go on social media and I'm like, why is no one else talking about what I'm talking about? Like, what am I missing? Why is no one else saying that the cuts might not be the first 6 months of the year? I feel like everyone's still pushing that agenda. And I just don't see it.
Well, are people still pushing that agenda?
Yeah.
I don't.
What?
Really?
Yeah.
Like outside of realtors?
The first 6 months of the year is what everyone's kind of thinking.
Yeah. I mean, honestly, that was based off. I think most people thought that late last year as well, right? But like,
they thought March or April.
Data changes. What was that?
They thought March or April late last year.
Yeah, I mean, they're not going to do it right before the spring market. Now, they're already seeing the housing market sort of reaccelerate a bit, and to do it before the spring market would be disastrous, especially when, things get busier around that time anyways. Tiff McCormack pointed that out on Wednesday as well. He did mention that they're paying attention to housing and seeing that things are getting busier. So obviously it's no surprise that they probably don't want to cut before then. Anyways, our preamble has gone pretty long. We're going to jump into today's podcast. We have Jessica Narula, real estate investor and also a mortgage expert as well. She's been involved in real estate for the past couple of years, starting off with doing actually a couple of fix and flip projects, proving to be a really profitable venture. But obviously as the market pivoted in 2022, she started pivoting her strategy as well. Throughout this entire time, she's also been very actively involved in the mortgage industry, focusing on financing for real estate investors. So we get into the client acquisition on the mortgage side, which is actually, pretty useful for me in this episode as well. But then we also get into the different strategies that she was implementing in real estate over the past couple of years, including what has went wrong with fixing and flipping in her experience too. So without further ado, we're going to jump into that in today's episode. If you enjoy it, make sure to share it with a friend, leave us a 5-star rating, and let's jump right on in. Just a heads up before we get started, this podcast is all about providing you information, not financial or legal advice. So if you need the real deal for your situation, hit up a professional. We can't promise you our information is always up to date or accurate, and we're not responsible for any investment decisions you make based on it. Markets change, information change, you know the drill. Anyways,
Thank you for hanging out with us responsibly. Let's jump right on in.
Hello, everyone. We are joined with our very special guest, Jessica Narula. Jessica, how is everything going?
Everything is fantastic. Thanks for having me on the podcast. It's been a cool journey with Rise, which I haven't told you guys either, but we'll get into that as well. So I'm excited to be on it.
Okay, I mean, that sounds pretty cool. But Jessica, for anyone that doesn't know you and what you do and kind of your background on the investing and more side, just give us a quick background on yourself.
Yeah, for sure. So I started as a real estate paralegal after university. I did that for 3 years. And I think about 2018, I'm going to say, I realized sitting behind a desk in a 9 to 5 is not really my thing. And like most investors, I looked up Rich Dad, Poor Dad because that's just the thing we do. And I started looking into real estate investing and went to every meetup I could find from Windsor to London. We used to have like limo tours back in the day.
Yeah, Jeff Weibo's, right?
And
That's a serious throwback.
Yeah, that's actually like a serious throwback. Like, or you used to like so many people that I see now. But yeah, so I used to go to a lot of the meetups. Wasn't investing at that point. I just wanted to learn as soon and how I didn't do it. No one in my family really does it, so it was just me trying to like figure out what the world I'm doing. Then 5 years ago, I ended up getting my mortgage license because I felt like the missing piece of the puzzle for me was like, how do I get the money? I know everyone. And as I get into the industry, I realize money is the easy part. It's the deal. It's the right deal. That's the key. But at that time, that was the missing puzzle. And then I actually started enjoying doing the mortgage side of things and working with investors and kind of guiding through the process. So right now, I was just telling Austin right before, but I am sitting for my broker's license. I'm almost done. So I just doing the phase 2. So I can essentially start my own team on the mortgage side. And I've done flips with Harry, actually, who used to initially be part of Rise. And then I own 12 stores, did a few in Cornwall, and I have a property in Brampton. So I did a lot of JV partnerships, and private money was the key aspect for my investing journey, for sure.
Mm-hmm. A lot to dig down on. Actually, before we even get into it. So one unique thing is that when we bring people onto the podcast, they all sort of have their unique journey. For me, I started off with finance, accounting, so numbers was our strong suit. For other people, construction's a strong suit. It sounds like because you are a paralegal, actually, interestingly enough, probably like the tenant side, understanding paperwork and regulations, that was your strong suit, which is something that everyone is struggling with nowadays. So really unique background there. So getting into real estate investing, you attended all of these events, a lot of information overload. What did you decide to do with this information, right? Because there are a lot of people in your phase where they go take a bunch of educational courses, but what do they exactly sort of do with that information? So would you be able to share your journey from there?
Yeah, for sure. So yes, I fully agree where you're going to so many events. There's so many strategies, like an outsider looking in, people say, yeah, invest in real estate. But when you get into it, there's a million and one strategies that you can do, and everyone's doing something different. And then it's like the shiny object syndrome that a lot of people have. For me, after I went to all of these meetups, what I had to do was actually stop going to the meetups after, because I was like, you know what? I have all of this information. I need to actually take action steps to actually use what I'm learning instead of just keep learning and adding on to the confusion. So for me, what ended up happening was I actually took a break from some of the events and totally reevaluated as to like why I'm doing this, what I want out of it, what my goals and my purposes when it comes to real estate investing, and how I wanted to like fit my lifestyle. And honestly, it was still a learning journey. It wasn't like it was perfect, and I don't think it's meant to be that way. And then I got into my first deal right smack middle of COVID. So the way I got over the whole analysis paralysis is I found the person. I went to see a realtor who was doing some coaching calls, and I ended up buying the property after the coaching call. It was off market. So it was just one of those things. There's going to be a point where you just have to take action because there's so much information out there.
So could you tell us a little bit about that off-market deal? Because traditionally speaking, when you I think when most people buy their first property, it's usually on the market in a lot of cases, right? Sometimes it's intimidating to go off the market because in my head, when I think of off market, I think of highly distressed properties. What's wrong with it? Why didn't they list it on the market? Could you walk us through how you got comfort around that and how that first deal sort of panned out for you and the obstacles as well? Because I think everyone likes to talk about the W's that they take, but it's more engaging when you hear about the actual behind the scenes struggles.
Oh, obstacles. There were many. So I got into this deal actually he's a pretty popular realtor actually. But he was doing these under 30, some kind of mentorship thing, right? So I went to his thing and he ended up introducing me he's a realtor. So he ended up telling me about a property that one of his partners owned that they were trying to sell off market. And at that time, I had no experience in construction. And the one thing that was truly like, I felt like at that time stopping me was like, I didn't want to take on projects and figure out the whole construction process. So I told her, I was like, I'm ideally looking for something kind of turnkey to like off market, still undervalue, a little turnkey. I can get it rented, sit on it and see how that goes. And he's like, okay, I think I might have a spot. And it was in St. Catharines. I saw the property, really cute, nice looking and all of that. And that's where I realized so many things where when I went to these investment events, I learned so many things that a lot of people told me, do your due diligence, do this, do this, do this. And for some reason, because I saw this person as an expert and then lack of experience in construction, I didn't catch a lot of things that I found out about after closing. So they had actually flipped that property themselves. But they had done like lipstick on a pig, and that's like me being an understatement. So a lot of the big ticket items, like the sump pump and like the roof windows, like when you look at like those big ticket items, they were insanely like distorted. Like it was like there was the water in the crawl space and then they actually even helped me find tenants, and that tenant ended up being like me and my dad and my brother literally cleaned out needles after we got those tenants out of the property.
When was this?
It was in 2019. Like, and the biggest obstacle was as soon as we signed the contract, 2 months after the whole shutdown situation happened. So it was right in the middle of COVID, like not middle, start of COVID. So the property prices were still like, people were predicting it's going to go down and no one knew what was happening. The banks didn't even know if they were closing. Like literally no one had any idea as to like what was happening. So that was my first property. I could have easily been like, you know what? I'm never doing this again and just gotten out of it. So we ended up selling that property. I call it a flip because it would have costed us more to fix their flip than us to like, just like sell it essentially. So at that point, it wasn't worth it for us to put in more and more money into the property because it just didn't make sense at that time. So we did make profit off of it, which is great. So I ended up selling it. The COVID market was a blessing. In that market, everyone was just making money. So that was my first property. And that's how I got into the off market thing. So it wasn't Austin, as like you said, it wasn't truly the distressed property, but it ended up being a distressed property.
That's why fix and flippers get a bad reputation. Whenever, Maya, I don't know if you had the same experience as well. Look, when I fix and flip properties, my realtors like, you don't want to advertise it as a fix and flip because people fucking hate it. Because when someone sees fix and flip, they think of shortcuts, and I think it's because a lot of people get burned.
It's true. Like most people do shortcuts. Like it's a profit driven like business, right? And people don't pay for like the brand new sump pump and the whatever you want to call it, the like waterproofing and stuff like that. Things you can't really like see, right? So that is what it is. But so where did you go from there? Because obviously the first one went call it like mid, but you made a little bit of profit on it. And today you're at 12 units. I'm wondering like where you went, what you did, and how you went about it.
Yeah, and like honestly, like Austin, you said, like you both said, actually, it did give a bad rep to flippers. And when I started flipping with Terry, he was actually one of the people who used to be part of Rise Network, and you and Austin like used to run the Rise Network before back in the day. And I actually met Terry, who was my business partner at the Rise Network. Hence the whole Rise circle comes back. He wasn't my partner in that deal, but when I told him, one thing we made sure when we were flipping, of course you want to see your numbers and your budget and everything, but we made sure the product we're giving is not going to put someone else in a terrible situation. Like, we wanted to make sure our quality was there. And again, in the bigger scheme of things, I think it was something that I had to learn as well. And it was a great learning experience where I'm like, okay, now I know what, as someone who is going to flip, wants to make sure that I don't do that to other people, essentially, right? So that was one of the big things. We ended up selling the property. It was in St. Catharines. Then I kind of steered away from the tenant situation for a little bit. It was just an overwhelming experience the first time I did it. So we did flips for about 2 years. We did about 3 or 4 flips. And then in the midst of that, we ended up like parting ways in the greatest way because we just weren't flipping anymore. And we ended up looking for more rentals individually, essentially. So that was from there. And then in terms of like the next unit, I ended up finding a JV partner who was super keen to invest in Canada. He ended up being my passive money partner for, we bought a duplex in Cornwall that was also off market. Actually, pretty much everything we bought was off market. And then a 5-plex and a couple of townhouses. And then, yeah, like we just kind of scaled through that. We are pivoting, but yeah, that's how it was just JV partnerships and the right relationships that helped me like scale from that and just learnings from it, I guess.
Mm-hmm. So let's backtrack a little bit. When you were doing these flips with Terry, obviously you were handling the capital side of things, not like putting in the capital, but getting the financing and stuff in order. Could you walk us through how that sort of looked like? Because I guess you had your first investment property, but money's obviously still going to be tight. I'm not sure what your financial situation was going into it, but I know you bought a wholesale for me and Etobicoke, and I can't imagine you guys paid that in cash. Right? So could you walk us through how did the financing situation look like? Were you going to individual lenders, like a mix, or could you walk us through that?
Yeah, so we were going through private lenders on my side, and there was a private lender that once you kind of build a relationship with them, after a point, they're just trusting you and you're doing it. And then we had an investor that was giving us money on like promissory notes. So there was a first like registered mortgage, and then we were also like technically a second, but not registered on promissory notes. We were raising capital essentially. That was both me and Terry in terms of raising capital. The investor was actually Terry's contact. And then I was taking care of like the lawyers, the accounting, all of the fun stuff. And then, oh my God, that Etobicoke property, that was a tenant situation there too. So that was, that was a fun one as well. But yeah, so that's how we did it. So we did private lending in terms of mix mostly, but we made a good relationship with a mix because mix are usually small too. So we made a good relationship with a MIC, and they ended up funding most of our projects after that. And then we had promissory notes as a second.
So I think the flipping business is pretty cool. I think that's a traditional method for a lot of people, like a lot of flippers. And the reason a lot of flippers like got caught with their pants down when the market turned, and you guys seem to have timed it pretty well and gone out before that. But the reason a lot of flippers got caught is it's a levered game, right? Like a lot of like expensive debt and stuff like that you borrow, and for periods of time your property is worth less than what you might have bought it for and stuff like that, right? So I do want to quickly talk about the mortgage business. Obviously, I'm in the mortgage business myself. Austin's coming into it. It's a good business, and you got into it in 2019, 2020. I'm curious about how you scaled up that business model, what that journey was like, and just give us a rundown there.
Yeah, honestly, when I started, a lot of my clients came from the the networking events I used to go to, because I also focus right away on investors. Like a lot of people are afraid of niching out. Like, most brokers go for the first-time home buyer or like the traditional brokerage training and all of that stuff. Just right off the bat, I knew who I wanted to work with, and I just focused on that. And it wasn't like, it was like easy breezy. That's all I got. I did maybe 2 first-time home buyer deals, but I really honestly did get 99% were investors. And it was a lot of people who were doing burrs and flips. So the private money aspect was huge. I did a lot of private. So for me right now, how I'm continuing to scale, it's focusing on that. Investors and commercial deals is what I'm focusing as my niche, and I'm sticking to it, right? And I think what happens is people get distracted. It's the same thing as in the investment side where the shiny object, right? So for me, I did the same kind of principles that I did my investing. I did on the mortgage side, where I just focused on a thing that made sense to me, that I could relate to, that I felt confident in, and I niched out. And a lot of then became a referral business, because investors, as we all know, don't buy one property a year. They're buying 5, 10 a year. So it almost worked out where I didn't need a billion clients. Those few clients I had were keeping me plenty busy, because it was just me before.
Yeah.
Awesome. And have you looked into branching out into the realtor side of things? Because as you said, there's different niches that you can focus on. I know for a lot of, I guess I wouldn't say people not in our industry, right? But like, they are top performers. They may do 70, 80 million in volume a year. They're specifically focusing on realtors that deal with first-time home buyers. Have you explored, so it sounds like obviously networking has been a big sort of lead source for you, but what other avenues have you explored to generate leads? Or is that really the bread and butter of everything?
Honestly, yeah. So now I'm getting more into social media marketing. At that point, honestly, there were so many things I would do differently. I was very busy just with the whole referral clientele, and also managing the portfolio, managing the flips. There was just so much happening at that time, and I had no one in terms of an assistant or anything. One thing I would go back and do is get myself organized right off the bat. But the only thing was, even the scale, I couldn't even predict the scale. It was just happened so quickly, because what are we, 2023 now? 2019, 2020, 4 years, it was flips, mortgage business, then 12 doors and blurring all of them. And it was just managing all of those tenants. It was a lot. So now I'm getting a lot of work done on the social media side and connecting with more realtors as well to create business style, but I'm sticking to my niche. Even if they're first-time home buyers, I'm kind of educating them on the investment side of things, how they can, understand that, instead of just buying it blindly as what they're buying their first dream home. So social media is another one of my ways, I guess. I'm now getting a lot of referrals through. We started our own podcast as well. So that's been, we haven't even released the first episode. We've just started promoting it and getting reels out for it. So that's releasing on December 26th. I don't know when this episode is coming out, but we're using a lot of that as content creation too, to get hitting it.
Yeah, no, and I think the social media side is important. I also think for anyone that's starting any business, right? I think you can go about it from multiple avenues, but social media has been pretty pervasive throughout. I'm curious, because you started at a time where, like you said, a lot of your clients were investors, flippers, stuff like that. How did you go about the private money side? Because I think a lot of our audience, they still need to raise private capital. Austin and I still raise private capital when needed, right? But how did you go about finding your first couple private lenders, or was it predominantly mix that you were dealing with?
No, so I actually ended up joining a small company that did private lending mostly. And then for 2 years, I was with Pro Funds, which is they're big on private lending. Carmen is big on private lending. So I ended up joining that. I was never in-house. I ended up joining them. So I ended up meeting a lot of investors and lenders through that. As I even got into business, spoke to lawyers, a lot of the lawyers ended up being a lot of private lenders that I used as well. So that was a great referral source. And then my brokers and brokerages, different people ended up introducing me to different private lenders and mix that were smaller. So they didn't feel like mixed, because they still heard your story. They still made a logical decision. And if you were able to build up a relationship with them, they kind of worked the similar way like a private lender would, who's an individual. And then, just meeting people, definitely, I guess, networking, I recently am also realizing has been a big source for not just clients, but everything pretty much. Even lenders.
Let me ask you the lending space right now on the private side, right? Obviously, rates have gone up. Investors have sort of pulled back, but there are still investors that are active. But private lenders are also much more stringent on their terms, what they're looking for, so on and so forth. How has that changed over the past sort of year? And where do you see that sort of landscape going into 2024?
So it's interesting, because even earlier this year, I was able to get 85% LTV deals done, right? Which was pretty, wasn't happening, but even earlier this year. And then it got tight again, where lenders were never mind. we're not going that high. What is happening right now with the private lending space? They're not just getting stringent, but they're also cherry picking just because there's just so much business out there. Like everyone needs private money. Two of the guys that I work with, like they're just guys with money, I guess. They literally told me, they're like, we just have so many deals that come across our table that like, if we don't have to, we just don't have to. Like they, the deals they would have funded a year ago, they're like, it's 65 LTV instead of 55. So we don't have time to look at it kind of thing. So it's just one of those things that like, if it's not like a cherry pick deal, like they're not even looking at it. And I do see that changing in 2024, to be honest. As we all know, they did stop the rate hikes. Do I believe everything they say? No. But they did say they're going to start dropping. I don't know. Like, I feel like a very resistance when I like quote them because I have like, they say a lot of things and what's going to happen is a whole
PTSD.
Yeah, I was like, I don't know if I have like trust issues here. So I was like, I don't know. But I do see a lot of my 85% LTV lenders crawling back in. So I'm going to use that as a trend. I see a lot of people, even on the private lending space, going on the commercial side or doing different things. One thing I am seeing on the larger scale, though, a lot of construction projects. Like I had a few friends tell me who are pretty interlinked with that industry. Like people are getting laid off. The projects are still quite delayed in terms of like even like big builders, they're delaying projects. They're not, going through it. So obviously I do see that changing in 2024, but I think 2025 is where I think we might see a little more stability and a little more like clarity as to like where we're going compared to like 2024, I would say.
Yeah, that's not. I don't. Sorry, Maya, you look like you were going to say something.
No, I was gonna say, I'd echo that, right? Like, I think a lot of people are really optimistic on 2024, but I think it's too soon. It's too immediate. Like, we're not gonna have anything kind of settling into the economy, kind of like working its way down. 2025 should give us that kind of ample runway, maybe even into 2026. We don't really know, right? But no, I'd echo that as well. I think if you look at what's happening with a lot of construction private lenders, those guys, like with a bunch of people that have just exited the construction space, like the remaining private lenders in that space, if you've got like a small deal, it's almost like fuck off, right? You've got like a nice big deal that is like worth their time. It's like, oh, it's pretty cool. Like everyone wants those deals, right? But that stuff doesn't end up funding. So that's another issue on it.
I want to make one note. Like hope, I said this before, hope is not a viable strategy, right? So although they are indicating that there may be rate hikes, if you're hoping for that, that's not a strategy, right? Because again, things are dynamic, things can change. It seems like yesterday news was negative and then it becomes positive, then it goes back to negative. It's been so volatile in the market. So I don't want anyone to, count victory while it's too soon here.
One thing I would say is we are 2 years basically into this downward trend, right? A lot of times we don't realize that because honestly, 2022 wasn't like that terrible for any of us, I think, right? Or people had just made a boatload of money in the first 6 months, which got wiped out in the last 6 months, right?
Last 6 months.
So it wasn't like that bad, right? But
they broke even.
We are still 2 years into this. Next year will be 3 years into this, which is almost like a mini market cycle on its own, right? So, I think a lot of people underestimate exactly how significant time is as well, right? So Jessica, so from here, like, where do you go with regards to like growing the mortgage business, growing your investment journey? I guess that's kind of like one of the questions that we ask as well, which is, where do you see your business going in the next 2 to 3 years? But what is the natural organic growth for you?
Honestly, right now, I'm truly focusing on my mortgage business at the moment, like getting my broker's license, working on, building my team and focusing on commercial deals, getting more commercial lenders onboarded on my end. And like you said, for both of us, I'm sure, as you say, you're in the mortgage side of business too, and you're seeing similar things where I honestly, even now, like I have clients with amazing deals and they're kick-ass investors. Like they know their shit, they know what they're doing. Even then, like I'm having a hard time getting them money. Even like when I've gotten the money from the same lender a year ago, right? And they've paid the max, like good history. So right now I'm focusing on creating a network of lenders, focusing on my commercial business. I do have a residential underwriting team that is like 20 years of experience in residential. So, I can still take that on. It's just personally, I'm focusing on more commercial and investor deals. So I'm focusing on bringing that as like, growing my mortgage business on both the client and lender side, because if I have a million clients, but no one's funding those deals, it's irrelevant. It's the same thing with investor business, right? Like you got to raise capital and find the deals almost simultaneously sometimes. And then on the investment side, I'm actually in a year or so, I was lucky that even my Cornwall portfolio, like we were able to, I did sell a duplex, which we still made like 45% return on our investment annualized. It was crazy because it's a smaller market, right? So we bought it cheap and we made good money on it. But I have the few properties that I left in Cornwall, I wanted to sell it as soon as possible too, to be honest, and pivot into more outside of the country and also potentially the commercial side if I'm going to invest in Ontario. So I see myself focusing on those three aspects. So international investing, my mortgage business, and the commercial side of investing in Ontario.
So what was the decision making to sell off those properties? Is it just moving on to bigger things, or has there been like troubles on the tenant side, obviously with the rates being higher? Could you walk us through that sort of thought process? And because these are JV'd as well, is your partner on side with these things? Because if you're telling them to sell it off so you can do your own sort of venture, that's an entire conversation you need to have on your own with the JV partner. So could you walk us through how that process worked out?
Yes. So my JV partner is actually a very sophisticated investor himself, just not in Canada. So it was actually an easy conversation. So we're going to continue JVing outside of this. Like once we sell it, we're still going to continue JVing just on different projects. So yes, a lot of the decision making came out of what's worth and that was a more of like a spiritual and a mental journey that I was like, what's worth my like time and energy, truly, honestly, and what actually fits my lifestyle. So I had to go back to the questions I asked myself when I started investing. And I just like feel like when it comes to the whole tenant situation, you're always tiptoeing in general. If you're investing in Ontario, it's like, just because of how the dichotomy of the power goes with the vendor and tenant. For me, we did have a tenant that wasn't paying for a year. We finally got him out actually 4 days ago, which was a big win, a huge win. I think that's why I feel a little.
How long did it take you guys?
A year. Like
a full year?
No, not a full year. Well, it felt like 10 years, but it was like March this year to like December now.
It's kind of fucked up when we're celebrating 12-month wins to get a tenant out that's not paying rent,
and it
right?
wasn't even through the landlord tenant board. That's the thing. Our hearing date was next year March. We had to like pay him out, but it was still cheaper for me to pay him to leave than it was to just have him there because I couldn't even rent out some of my other units because of how he was. So yeah, it's just like, yeah, that's what I mean. I'm like, now that the tenant is out, we'll get it rented out and stuff like that. But I just like, it's also small town investing, right? I feel like the tenant profile, actually you can find any kind of tenant profile anywhere, but I found like in smaller towns, even though the prices are cheaper, you are opening yourself up to a different tenant audience, no matter how crazy renovations you do, to be honest.
Yeah, and that makes sense. I guess that's sort of the trend that we're seeing investors to move into more either landlord-friendly provinces or countries. So what's on your radar right now, and have you put the pieces together on what markets you want to pursue and building your team, or is that a process you're just getting started off with now?
So one thing I've truly looked into is I went to Tulum in March, and I actually I was there for 7 days, and out of the 7, like 2.5 days, I was looking at real estate. So I definitely found amazing people down in Tulum. I actually even found a few people who are Canadian and are investing down there already. I also found people who Canadians help invest down there. They're builders who live in Canada. So Tulum, I feel like the most comfort in terms of like people and team. Partner is actually also investing in Joshua Tree. So I'm exploring that avenue through him. I haven't fully dug into that part. But we're looking a lot of it into like even the hospitality stage of things. So more niche Airbnbs, not just normal residential, and like doing that more potentially internationally and seeing that bigger picture that way and building different teams. And definitely my JV partner has been a big part of it because he already does international things. So it's been a good, like that's been a great thing to have him. And like, it's also been great because we were in negative cash flow for so long for one of our properties. It's good to have a partner. Like one thing I would say if you are looking to JV, don't JV with people on their last penny, please. Like don't do that to yourself because they're going to stress you out. Like have someone who has the financial backing and is able to like carry on things when like, things go wrong. So those are the two places for now have the most comfort in.
Yeah, so I'm just curious about Tulum because we've had quite a few people, or I know of a few people that have invested in Mexico as a whole. But what does it look like from a financing perspective? Are you guys going in all cash? Are you using private money? Why stop at Mexico? Why not go to Colombia? Like Mike Van Hoot, I think, is in Colombia, Panama.
Yeah,
Couple
El Salvador. Yeah. So I met a realtor here who actually does help, like he's Latin American and he actually helps Canadians invest in Latin American countries. So he is investing, like he's kind of finding projects all over there. And the only reason I say Tulum is like, it's the comfort right now. That's the only place I've visited. And I think like for me, if I'm going to invest internationally, I want to feel like I've been there. I know the people. I've been there multiple times. And like, just have that comfort for myself. And I just haven't visited those other places. And that's like very basic, but that's my reason.
Yeah, no, I think that makes sense. I think you gotta do what you're comfortable with and whatever is kind of up your appetite for risk, right? So at this point in the podcast, we like to ask, I guess, two questions, Jessica. So the first question is, where do you see your business in 2 to 3 years from now?
So when I'm focusing on the mortgage side of the business, I see myself creating my own brokerage with my team, focusing on commercial and investment real estate and working in-house potentially with one of the bigger commercial brokerages as well. So that's where I see kind of in the next 2-3 years for my mortgage side of the business. In terms of my investing side, I would see more lifestyle-based investing. So like places I would want to go to as well when I am not, using that as for investment purposes. So if it's not rented or Airbnb, I want to go there as well. So I'm focusing on more lifestyle-based investing into places that truly like fit that picture, which is why Tulum was on my radar because I also just think it's beautiful.
Cool. And then the second question is for a newer investor getting started in today's market. What kind of advice do you have to kind of share with them?
So it's interesting. I was thinking about that. I was like, what would I have told myself if I knew myself like 3 years ago, like literally? And I think like you guys can probably attest to this fact where when we used to go to all these events, everyone used to talk about leverage. That was like a big thing.
Yeah.
What happens if shit goes wrong, dude? Like it's not like you can't, of course, leverage is huge. I'm a mortgage agent. Like I know great leverage is great, but I would say now if you're going to leverage, be smart about it. Don't over leverage yourself. And I think Austin mentioned it. Don't, hope that everything will work out. Like know your numbers and just make sure everything will work out. Instead, as investors, we have that flexibility to make those choices instead of being emotional about our investments. Other thing I would say is like, work with people who understand investments. Like really, like your professionals matter more than you think they matter. And having the right mortgage broker, mortgage agent, realtor, and property manager will make your real estate investing journey a lot easier and smoother. Right? So I think those are probably two things I would say for anyone who's investing in this market. And truly, like when you buy the property, make sure it is under market value if that's what your target goal, goal is to get something that's under market value. Like cushion yourself when you're buying those properties is what I would say right now.
Yeah, no, I mean that's a good point, right? It's funny that everyone, including us, we talked about leverage before while it was sexy, and then we're just like, oh wait, I guess it's not as attractive. You learn these things while you go through the real estate cycle, which is why we added a disclaimer now in the beginning of our podcast saying this is not financial advice. Because me and Maya are not experts, right? Like, this is our first cycle, realistically, that we're going through.
Yeah.
It's tough, though. It's tough, right? Because when everyone's scaling, you want to scale as well, and that does involve taking debt. But I think really, at least where we're at right now, the way to build success in real estate is taking it nice and slow and investing for the long term and not putting yourself in compromised positions.
Yeah. And I think like when I was talking to someone at a meetup and they're like, oh, we just buy one property every couple of years. I was like, you don't even know how underrated that slow pace of investing is. Like, truly, honestly. And I was like, in general, also, like, I think, like you said, Austin, I think that it comes back to your why. Why are you investing? Is it just an ego thing that you want those leveraged doors? Or is it like a purpose for it? Is there is there something you want from it? And I think like once you realize why you're doing what you're doing, you'll automatically realize where your decisions are coming from. Like, are they coming from a place of, you know, I want to create something nicer, better, bigger, or just from a sheer place of comparison and ego? And I think that will be the next tip. Like, acknowledge where it's coming from.
Yeah, I think it does come with experience, right? Like, it's always sort of when you go through the ups and downs, then your ego is going to be humble. So although we can give that out, there's going to be some people that won't necessarily listen to it till they face their own obstacles. But this was a fantastic episode. Really enjoyed all of the tidbits that you gave, Jessica. And it's really cool to see what you've been doing over the 5 years, from flipping, buying and holding, joint ventureships, international investing, growing your mortgage business. So you have a lot on the go. People want to continue to follow you along as you continue doing these cool things. How could they best do so?
Honestly, I feel like Instagram is the new business card. So I'm just going to say Instagram. You can follow me on jssn.invest. And yeah, it's the best place to reach out to me. Just DM me and I always respond. So yeah.
Awesome. Okay, perfect. Yeah. And if you guys enjoyed this episode, which I'm sure you did, make sure to hit that 5-star review, share it with a friend, comment, because it helps bring great guests like Jessica out. And until next time, everyone, invest smarter and live better. Take care, all.